Hey, good evening, everybody. It's Ken at Tortoise Capital. This is the daily assessment or the daily after action review for the live trade for March 6, 2020. Got a lot of stuff to cover tonight. My intention is to keep doing these evening podcasts after the market closes so we can put the day's trade into perspective, and then that's what I would carry forward looking into the daily report. Now, during the week, I can normally get the daily report done and then roll right into a review of the signals and whatnot. Friday nights, I'm not going to do that because I want to take more time with the weekend report and do a little more thinking. So I'll typically try to produce those on a Saturday. But as long as this market is nuts, I'm going to keep doing the dailies because there's so much to reinforce each day that this is where we've got to be really good at our game. And so it just seems to me that the daily strategy podcast, if you will, is important to do. So here we are. So I'm going to review the master class, then the case studies from the day, and then a speed run of the portfolio, and then call it a night from there. I got a couple doctoral lectures to do tonight. Hey, I just made a decision on how to do the education piece. You'll see this at the end of the masterclass too. But I found a website and a learning management system, a corporate learning management system that looks pretty good. That's going to let me convert PowerPoints and videos into really nicely structured online web courses, right? And so they're going to give me unlimited storage and unlimited bandwidth. And so what I'm going to do is start converting all of my standard speeches and then all the boot camps and the 10 years of live trading workshops and research weekend presentations. I probably have 1,000 to 2,000 hours of quality material from all that, and so I'm going to hire me a little assistant here to help me start turning that stuff into structured, focused web courses, and then I'm going to hang all those in that catalog, and then for a flat annual fee, I'll let you take all the classes you want as many times as you want for that flat annual fee, and that way it'll be a little easier than hunting all over Basecamp or YouTube for that. It'll be grouped into logical courses with structured names, and then we can go for it that way. That way, if all you need is the like the operational reports, you just subscribe in the usual way through Patreon just to get the data flow for operational trading. But if you want to delve into the educational piece, then there's a separate path. You go down through that, and then the that website will get done. So I'm going to plan to keep adding to that catalog forever, you know, and I'm training some guys at work to do the same thing. At the same time, I'm starting the International Coaching Federation certification for executive coaching because I want to add a little more structure and theory and best practices to what I already have, which I think is pretty good coaching, but that's based on a military model, my martial arts training, and athletic coaching. So I want to add the theoretical element of executive coaching to my theoretical management degree, and I think that way I'll be able to do a more well-rounded job of the coaching and add more structure to that. My plan on that is going to be if you are subscribing at some level on Patreon and you want to do monthly coaching in small learning groups, then we'll just add $100 to the Patreon service. But if you don't want the coaching, you just want the report, just subscribe regularly at Patreon. So more to follow on that. It's going to take me about 6 to 8 months to go through that program at George Mason University. I got turned on to it by my one of my doctoral mentors, who was one of my dissertation readers who teaches at George Mason, and he connected me with the dean of that program, and it looks really, really good. So more to follow on that. So those are a couple things coming down the pipe here shortly. I'll be starting the transcription of raw material into structured lessons this weekend, and we're going to get that going. So more to follow on that. So here's a question from John Pogue. He had a question about energy, and he's got a couple. He's got some put positions that are up almost 200%, and now the yield in XLE is at 16%. So he was looking for some guidance. And my thought on that was, look, the whole energy complex is very interesting. It's bottoming when you look at the at oil, coal, gas, natural gas. What's really cratering and was off another 10% today were the like ConocoPhillips and oil exploration and all that. Some of the raw materials are not suffering as much, but oil itself and the derivative companies are hurting. So I would just say, look, make sure at this point you've locked in those gains. There's certainly going to be a 20% slowdown in global economic activity due to coronavirus and the tightening up of the global transportation networks. But long-term energy is going to be fine, and there's a real strong argument to be made that it's closer to the bottom than the top. So I just advise them to stay with the positions, manage the money, manage the positions, but recognize you've already got a substantial gain. This is from Laurent in Europe, and so what I want you to just take away from his posting is he and I were talking about how to develop continued training and education at a distance through, and that really is what prompted me to push for the finally get off my butt and do the structured web training instead of just referring you to video links in an unorganized way. So this is what Laurent's doing, and I just think I just want to highlight a few key elements. He's using a trading journal with screen captures for his trades in order to mark it up, and then he uses that trading journal to drive his learning journal, which then captures the lessons learned, and then that leads to his action journal. So that little process right there, which you described in the boot camp learning videos, is a really nice way to do that. He's got other things going on and a family to care for, and so he's doing 2 to 3 sessions of trading a week. It takes him less than an hour to prepare, picks 3 or 4 targets from the daily report, and he focuses on those. He trades hard for about 90 minutes in a sweet spot, and he's very focused, can capture the morning moves, gets his daily gains, and then he may keep a partial position overnight, like the old keep 20% that is funded by the intraday gains, and that way he's able to align this with his business and family interests. He likes the multi-time frame analysis, which gets you to the big picture. He's using the chain trading patterns that we talk about in the most recent boot camps and live tradings. The hybrid frog, the owl, the collapsing and emerging dragons, the Z3 pinches, that stuff, PSAR flips. He is supplementing this with his meditative and spiritual practices, and he's getting it done. So well done. Steve asked, what do those big rectangular boxes mean? He understands what the shaded boxes were, because I'm usually using those to show noise and congestion areas, and then breakouts from that yellow box become directional trades, or the yellow box is also the noise risk box that I'm using for the initial position. But he was interested in what the black boxes were. So those are just simply my way of, as I say here, marking off each trade in the series from start to finish. I just go from the open to the close, and I drop that down to the MACD 4 Seasons histogram, so I can make sure that my entries and exits are lining up with the seasonality aspect of MACD histogram and MACD 4 Seasons. And that's a very good discipline, so you can see which part of that, of the tides, of the hydraulic trends you're getting. We'll see that when we look at some of the charts today. We're going to see a trade from Steve, and I want you to I want you to feel his feelings. And we'll look at the chart here in a minute, and we'll see these again. But he says, hey, everything lined up for this trade with the consistent daily trend and the statistics. He used the gain stat to calibrate the morning move, and then that rolled into a counter trend move, and then the combination of the RLCO, the PSAR flip, and the MACD crossover I'll let him find the turning point with ease, and to have a 10 pip position size stop and a 5 pip execution stop, and he rolled into a beautiful 4R win, and it was nice, picture perfect. So not when we look at the chart we'll see that, but I want you to feel the feelings. This is the sound of a guy that is internalizing that framework and being able to make sense and see it as just part of his habit of looking at the market and making sense. So this is what it feels like when you're adjusting this stuff to fit. The home study program initiative is what I just sort of described. I'm looking at the price point for the first 100 folks to be $3,000 a year for unlimited access to all the courses, and as I make them, I'll just keep adding to them. Like, I got about 800 slides that I've shown at various times in the various workshops. Every one of them has a story, and so a lot of them I don't get to in the most modern form of the classes, but they're all kind of mini lessons, so I'm going to get all that stuff done to make it accessible. I just feel a need to get that done and documented and in place. Then the next 100 students at $4,000 a year, and then everyone after that 200 will be $5,000 a year. And then if you're a discount program person, the 50% discount on all of that applies as well. And reminder, the price of that thing's going up to $10,000 on 1 April. So if you have any ideas about doing kind of like long-term study and operational approaches and coaching in the future, that discount program is a very good deal. Very good deal. Alex has it, and I think he'd tell you that that's a good deal. The bundle right now is on sale for $4,000. We normally are selling it for $5,000. That's probably going to go up to $10,000 once I think about it longer, somewhere late in the fall. I don't want to. That's a big price, but so I'm going to let you guys continue to think about that one. But by the end of the year, I'm going to make a decision on that one, and that gives you information and trade framing independence of my report. So if I get hit by a train tomorrow, that thing is still there, and TC2000 makes beautiful charts, has filtering and modifications, and that gives you the ability to edit your own dashboard, and that bundle does even more things than I use in my reports, because I look at the Dow 30 and the ETF 30 and a handful of my own tickers. Danny's got that thing set up so you can look at thousands of tickers to include all the swing trade patterns and everything. I just think that long term you should give that a serious consideration, and I just think if you're in the sound of my voice, if you don't take advantage of that $5,000 price on the discount program, I can't speak for, I got obviously a vested interest in all this, but that's such a no-brainer. If you have any trust and confidence in what I'm doing in the next 20 years of stuff I'm going to produce, that discount program is going to apply to all of that, even stuff I haven't even thought about doing yet. So just putting it out there. All right, so that's that. Let me go to the case studies now and zoom in on the tactical trades, because there is a lot of goodness from today. Let me find where we are. Yeah, so here's the first one. This was, I closed out a swing trade in UVXY late this afternoon, about 2 o'clock Central Time. The market had sold off huge. And this is what I looked at. I said, on the Dredge report, so this is kind of my spider sense working. I was in the classroom with my officers, and I was giving them a strategy and tactics. There's just sometimes when enough is enough. So this is what the Dredge report was saying. Rates near zero, liquidity concerns. My own personal opinion is that, for the U.S. elections, that's my political opinion. I'm not going to say anything about that. But I closed out my speculative swing trade in UVXY. So I've had 2 legs of the UVXY trade. I don't talk about that much in the speed runs because I'm afraid about people following me and trying to do what I do. And this is such a speculative trade that I didn't feel I could advise it. But in my own account, I don't really care, so I'll just go for it. So I've had 2 legs on that trade, and I cash them at the peak. Like this first leg up was from 14 to 24. It gapped up and started selling off, so I just covered the whole thing. 3 days later, I bought the 1, 2, 3 breakout on the swing trade. It closed well, so I used that day to fund on the turbo trade to fund it. That thing was up at 37 2 days later, so it went from 25 to 37. That's a 50% move in 2 days. That felt like enough. So I cashed that, and that's going to roll into the UDOW afternoon trade I want to show you here in a minute. But that's how I do that. So this was the UVXY intraday trade. So this morning I was scrolling around in the classroom listening to briefings, so I couldn't trade. But around 11 Central, I got the OWL entry. The OWL would actually have been here where the purple dot is, but I took the continuation. So there was an OWL, a retracement. It made a higher low. So I want you to see all the way through here was a series of lower highs and lower lows. But then we got a higher low. So I bought the RLXD with a stop at the red line. Never looked back. It took out the hump of the dragon and the RL10, so added a position. It got to the VWAP and then started to fail, so cashed a 2-bagger. It held support at Z2 and then got the RLXD and crossed the VWAP, so I bought it again. Held support, bought a second position, made a 1 top, 2 top. It couldn't get above the Z3 excursion. So on the second RLXD, cashed. It made a new low. I tried to get short. I took the fractional loss on this one, on the RLXD. It didn't break out higher than the previous double top. Then gave me a lower high on the dragon. So I played the collapsing dragon and the collapsing RL10 here. Played a second position short when it crashed through the intraday VWAP, and so that was a big freaking move. It came all the way back down to here. Next one up was this one. So this long slide was where that UVXY trade was working, and so I was playing this with SDOW. So this is UDOW. That's the triple long DIA. SDOW is the triple short DIA. So while UDOW is suffering like this, and I'm showing you where these markers, I was actually trading that in SDOW. So it's an inverse position, and it's up and to the right. So it's easier to see sometimes. So this one was the equivalent of when it crossed the RL270 short on a collapsing dragon, a collapsing VWAP, and that's a collapsing dragon from here, second position. A collapsing RL10, third position. That felt like enough and then scratched out of the third position. Then at this point, there's like 45 minutes left in the session. And I looked at this and said, the UDOW is down 10%. That means the Dow's down another 3.5% today. And I said, that's almost 20% down. And my belief was, is there any chance that the international global banking and government conspiracy might do something else this weekend? Maybe. So I was willing to just take those shorts and cover them. And then I bought UDOW at 83, couple thousand shares. 10 minutes later, that's a 2 execution hour. That's $2 of gain on 2,000 shares. That's $4,000 in hand in 10 minutes. I was like, man, what am I going to do here? So fortunately, I just tightened up my stop. It took off, and about 5 minutes later, it was at 86, and then got to 88, and got to 92, and then I ended up selling a bunch at 87 at a hesitation, and then kept the rest as a swing trade to fund the overnight, because I just think that was going to be a good chance of a gap up. Now, one of the reasons to end this whole run on the way down and to buy this was to take a look. I look back here to the previous excursion, the Z3 adverse excursion. When this was going up, the Z3 move that would be extreme in the other direction was this Z3 level. So I just projected that all the way across. So the magnitude of this sell-off is seen as a Z3 excursion and on the earlier adverse move. So that just seems like a logical place that if it was going to find support, it would find support at a Z3 excursion from the other direction. So, and then I had money in hand from intraday trades. I said, let me just try it. And then that worked out. So I had a fairly tight stop. That's what makes this 2 execution R. This was from Steve, and I just want to talk about his, or no, or is this Eric? This is either Eric or Steve. Whichever one of you it was. I'm sorry if I can't remember right off the top of my head. But he's got a 4-hour trade in gold here, right? So this is his narrative. Gold kept up while stock market rallied it from Wednesday. He saw higher lows in gold. So 1, 2, 3, 4. He saw those higher lows. When he took his 8-hour bar and expanded it into 1-hour bars, he saw those higher lows. So he took a low-risk entry when it broke out above this yellow box. I drew the yellow box, but it was basically when it broke the previous hump of the dragon. So he got the entry here. Already here he's got no lose plus dinner for 2. And now he's managing that trade during the movement. And then it starts chopping around a little bit, makes one more excursion, and then he's out here for a 4-hour gain. My commentary that I added here was this. So that was his talking about it and his reflection. And then, oh yes, it's Eric's commentary from the Eurozone. So he was talking about what it felt like. And what I want to say is, take a look at the 3 yellow boxes that I drew, and then feel with your trader's mind and your trader's hands the qualitative difference in the way that price feels in those 3 boxes. And think about how that might lead you to tighten up your exit, so instead of coming all the way through the dragon and beyond and then cashing a 4-hour win, maybe there's a way to get a little bit more of this, because this was sideways chop. He got the breakout when that changed, and look how nice and orderly the move was. Then you start getting 2 backfills already. It's getting choppy. And so maybe as you get another excursion, then it starts to fail, maybe you can get half of that big red candle. Just saying. But then I take a pause and I just say, you know what? The way he talked about managing this in a very relaxed manner ends up with a 4-hour trade. So don't try to over-refine it. At some point, recognize that little relaxed style gets you a 4-hour win. So if it's not broke, don't fix it. Just saying. This was a zoom in on that final UDOW trade. I want to go back and just show you the entry. So this is what it looked like at the entry. This little green dot was the entry down here around 83. So now I want to look at, this is that same entry, excuse me. This is that same entry at 83, and now it's expanded a little bit so you can see the rest of that move. So you get that entry with that 50-cent stop right in here. That's really the bottom of the PSAR and the RL90 rolling over. So now notice the 90 rolls over. The dragon, or the dragon has rolled up. The 30 has rolled up. The Bollinger Band mean rolls up. You get a Z3 excursion here, and price crosses the RL270, which now is rolling up. It crosses the VWAP. It pulls back, and the RL10 never breaks through the dragon. The PSAR holds, and then when it takes out the RL10, I just buy a second position. It gets a Z3 excursion, comes back, it holds support. Now, if you cash it anywhere in here, I'm not offended. That's a great trade. I had money to burn, so I felt like this was moving. It held. So if I'd gotten out, I'd certainly re-enter here, so I just added a third position there anyway. And then when it made this excursion and started to collapse, I've only got a handful of minutes left in the day, so I just take that trade, and then it immediately went to 91. But I don't mind that trade at all, and then use that to fund the over-the-weekend swing trade. That's how you do that. Here's the summary of the daily Four Seasons and the what's going on in there. So now you can see this a little bit easier. So here was UDOW was down. It ended up being down 3% for the day. The S&P was down. Where are we at here? S&P. Come on now. There it is. So the S&P ended up down 1.65 for the day. Everything's in the red. A handful of defensive plays. So the volatility, the treasuries. Walmart was up today. Boeing was up today. McDonald's was up today. Go listen to last night's video. Those were the ones we called out as the relative strength leaders and to be ready today, and along with the Aussie dollar. So they were all up today. I'm just saying that those continuation patterns from the end of the day are often insightful for the next day. You figure out pretty quickly who are the relative strength winners and losers, and all else being equal, stay with that. And it worked out fine today. Energy sector got smashed. Devon Energy down 16%. Virgin Galactic down 10%. Oil down 9%. Energy down 5.5%. U.S. Steel down 5%. I'm still in that long swing on that, by the way. My stop on that is down at 6. So I'm $1 underwater, but I don't care. That's a swing trade. Brazil, Mexico, all of those things worse than the triple inverse Dow. So that's where the weakness was. Target-rich environment. Here's a quick look at the daily coronavirus of where all the reports were. Here was Hubei province in the orange, and then the rest of China. And now you can see a month later, South Korea, others, Iran, and Italy is who's getting smoked. So it's no longer, and that's that Diamond Princess cruise ship. So it's out of China's hands. It's global now. Here's the headlines from Drudge. If you just look at that, this is sort of the I found some interesting things in here. Robots helping us by fighting the viruses in China by doing disinfecting, taking temperatures, preparing meals to reduce human-to-human contact. Thousands of Americans asked to self-quarantine. The cluster of people infected on the Mexican cruise ship growing. 21 positives on the California cruise ship. A coronavirus motel in Seattle. Las Vegas is suffering, so being short win makes good sense. WYNN, it's a frog champion, very volatile, trades like a champ intraday. That's got to be on your target list. eBay's not letting people buy face masks and hand sanitizer. Hey, people, soap and water, and it's a virus. Doesn't help. Shortage of test kits. The health secretary is getting bypassed, so the breakdown of the government's ability to handle it. Now, if you think it's bad now with Trump, just go listen to Joe Biden on YouTube. Just Google up Biden's gaffes or word salad and listen to that guy. He doesn't know where he is, can't complete a sentence, never had an original thought. The ones he has are stolen from others without attribution. If you want to make a bad situation worse, put Biden in charge. Jesus Christ. Pardon my language. Ammunition sales are soaring. Costco spraying people with disinfectants at the door when they're going to do their wholesale shopping. So it's just starting to unfold in the U.S. Longer term, I still believe this is going to cause a return of jobs to America so that we become self-sufficient in goods and services manufacturing. And, 5 years from now, this will be the turning point in making America multifunctional and self-sufficient once more. So that's sort of the news at a glance. I want to do this. We're 30 minutes in, so I want to do the speed run real quick. It's all the things that you would expect. There's nothing really surprising on this. I've got to do a doctoral dissertation defense at 9 o'clock tonight in 30 minutes, so this is going to be abbreviated. And I'm going to tell you what, since we're already 30 minutes into this thing, I'm going to do the speed run in conjunction with the weekend reports. So I'm not going to give you much commentary on this one. So I'm just going to take a couple minutes and we'll just so that we have it on record, and you can see what's going on. So we're short Alcoa. That's working. Apple, I'm just studying it. It's going to collapse. The Aussie dollar, the swing long is still working. Boeing, we're short one, and I thought about covering it today, but I think it's going to get smacked again tomorrow. Caterpillar, I'm not short. That had relative strength. We're short one on Cleveland Cliffs. That's working. Cut, I covered the short yesterday. It's collapsing. That's bad for the economic forecast. I'm just studying diamonds and trading it intraday. Devon Energy, we got short one today. A big win on a hybrid frog. The short in emerging markets paid off huge today. The same in EFA. Got short in Japan, but it retraced a little bit, but I'm still short that one. The short in Mexico, big payoff today. Look at this thing. Gee, many crickets. The risk was, 50 cents, and we're $2 in hand. I mean, that's just massive. Brazil, the short paid off huge. Home Depot, we're just studying. Russell, studying. Real estate, we got short today and then scratched later in the afternoon. McDonald's covered the short today. I'm keeping PBW. The swing gain on that thing came back to zero, but I'm going to honor that stop. The speculative swing in Virgin Galactic still selling off. My stop is stable down there. I'm just leaving it for the long term. Short one in Simon Property Group. It retraced by the end of the day, but I'm still in the money on that one. Treasuries. Look at this swing trade. Holy mackerel. The defensive plays. The stop, you got to move that up to here. That's so deep in the money, it's ridiculous. Tesla got smashed today. Short one, still working. Natural gas. I'm just watching. Let's see. This is oil. We got short here. So we're short one in oil. UVXY, I showed you how we're trading that one. That's the two swing trades on that one. Wiz got smashed today. It's broke. Walmart, beauty. Look at this sucker intraday. Huh? Look at that run. This is the same time I'm making gains in the UDow. This is that's the move in Walmart. So I'm getting that move, but I'm getting it in UDow, which is very liquid and leveraged, so I don't mind that. So wheat and precious metals. Let's get back to the dailies. Sorry. Yeah. So wheat and precious metals. The swing trade is fine. Win. Short one. It got smashed. It's going to go lower. U.S. Steel. I'm still in that one. My swing. I got in it at 8. I'm going to hold that. I'm going to honor that stop at 6 and just leave it alone for 3 months or until it hits 6. So it's either going to get to 10 or 6 before I do anything. It's going to 10. XLB, just studying energy. XLE. we're short from yesterday, paying off massively good. Finance, we're short one, massively good. Oops. So that thing is just massively good. Technology is giving up all its gains. We're short. Or, no, we're not short on that one. That was the cashing the swing. Then healthcare, we're just studying that one. So if we look at the S&P weekly, just from a distance, you can see all of these gains. I just want you to see the difference between this move. That was the last big sell-off. And now if we map that again as a point of comparison, we're just about the same level of magnitude that led to that massive gain. But this one sure feels different, doesn't it? It does to me. This was just excess gains and then some momentum selling and impeachment. This is a global pandemic that's out of control. Slightly different. You can't talk your way out of this one. I'm sorry. So that's the weekly on the S&P. If we zoom out and look at the monthly and like 10 years, this little move here is about the same as that move. So the monthly sell-off, the magnitude of the monthly sell-offs is about the same. And you got to go all the way back to 2008 and 9. That was about a year's worth of selling. And the percentage basis was much bigger. Because I don't think, we're not on a log scale on this. I wonder if how I put that. Oh, that's arithmetic. So we got to look on the log scale. Yeah, that gives you... That's the difference between a log scale and a straight line dollar figure scale. So this little sell-off and this little sell-off here, let me this sell-off and this sell-off compared to that sell-off from the financial crisis, not even close on a percentage basis. Although this feels like the beginning, that's what it looks like when that damn thing goes. This is down 20%. This was down 60%. This was 3 times the size of that one. So just as a matter of perspective, like this one collapsed and crashed through the RL270. This one is only back to the Bollinger Band mean. Look how far this moved from the Bollinger Band mean to the Z3 excursion. This one hasn't even gotten to the Bollinger Band mean yet. And it's just cracking the PSAR flip. So what I'm saying is, as bad as this feels, we have not even seen panic yet. So just keep that one in mind. All right, that's everything I got for you tonight, guys. Send me your questions. I will do a deeper speed run when I do the reports and the strategy session. And 1 April is sort of the end of this grace period. Future subscribers, at the gold, silver, they're going to get access to just the baseline swing and day trading programs. You guys that are already in the program will have access to those legacy programs forever. You don't have to subscribe to that. The restructured one, you're going to have access to the existing base camp as my promise to you. So I'm not going to take anything away from you. But getting the more structured and the fine-tuned package to projects, when I go through those thousands of hours of videos and organize that with a team of guys into some course packages, that's going to be part of the that home study educational service. So I just want to alert you to that. If you're not in the discount program, you might want to think about it now before that price goes up to 10 grand on 1 April. So take good care. Take care of yourself and your family. Remember what's important. Get enough rest and sunlight and water. And watch your travel and make your biosystem as strong and as healthy as it can be. And we'll beat this damn thing. I'm betting on the human race. That's where the smart money is, okay? Take good care. Send me your questions. Keep the faith. Keep your risk measured and your powder dry. Take good care.